So before I start the webinar, just let me share the latest trading competition with you first. We are running a SocGen DLC paper trading competition. The simulated trading competition will run for 11 trading days from October 14 to 28 October, with 10,000 worth of prizes up for grabs. Participants will receive 100,000 USD paper money to trade SocGen DLCs. You can trade Singapore stock DLCs, Hong Kong stock DLCs, US stock DLCs, and indices DLC issued by SocGen during this paper trading competition. So as long as you are among the top 3 most profitable traders in these competitions, you can win some prizes. You must first complete at least 3 simulated buy trades of SocGen DLC during the competition and achieve the highest profit rates from October 14 to October 28. First place will get 3,000 Sing dollar. Second place will get 1,000 Sing dollars, and third place will get 500 Sing dollars. You also have a chance to win lucky draw prizes like a MacBook Air, a 31.5-inch Prism screen monitor, or an ergonomic chair itself. Additionally, if you are one of the first 60 participants to complete a simulated US stock DLC trade, you will receive a $50 CapitaLand voucher. So I believe this is slightly the easiest prize to win. Just ensure that you are one of the first 60 persons who trade on October 14 when the market opens. Okay, so let me kick off this webinar. I'm James, a market strategist at Tiger Broker Singapore. Alongside me today is Marcus Ng, Vice President from SocGen. And our topic today is navigate the upcoming Magnificent 7 stocks earnings with new US stock DLCs. So basically, the US stock DLCs are those Magnificent 7 stocks DLC. And I will be talking mainly about the fundamental outlook of this Magnificent 7 stocks, and Marcus will be providing an in-depth presentation on the Mag 7 stock DLC itself. So as usual, let me go through the disclaimer first. This presentation is provided to you for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of future performance. So I will share about US equity outlook, Magnificent 7 stocks, and DLC trading strategies. So let me briefly talk about US market outlook for the rest of the year first before talking about the Mag 7 stocks. Okay, so currently the analyst consensus target price for S&P 500 is 5691, representing a 1% downside compared to yesterday closing price of 5751. But I urge you not to care too much about the target price, because this is just the base case target price of the research houses, but not the best case target price itself. And personally, I am looking at 5920 to end the year based on technical analysis. And if there is no hard landing next year, my target price for 2025 is 6890. So I reckon it may sound absurd to some of you, but let's put it this way. The current price for S&P 500 is 5751, and to reach the target price of 6890 by the end of next year, it will only need to increase by about 20% over the next 1 year and 4 months' time. So it's not really that difficult. But I don't reckon that US stocks will go up all the way from now to the end of December this year. I believe that we may see a correction in October, followed by a rally in November, December, and possibly into January next year itself. The main reason I still see an October sell-off are expensive valuations, potential negative earnings surprises, election uncertainties, and the risk of another yen carry trade unwind. And lastly, the bad October seasonality itself. And I just want to talk a bit about the bad October seasonality. Historically, the fourth quarter tend to be a good quarter if the S&P 500 return more than 20% in the first 3 quarters. So there have been 24 instances when S&P 500 return more than 20% by the end of the third quarter. 87% of the time, S&P 500 deliver positive return in quarter four. The average quarter four return was about 4.1%. And if history repeats itself, we should see the S&P 500 goes down in October, bottom out in October, and then goes up in November and December itself. So for Magnificent Seven stocks, one trading strategy is that you can adopt a bearish view in October, consider short position in October, but turn bullish in November and December, where you should be having some long position in November and December itself. In any case, if you believe that the broader market like S&P 500 will go up, then the Magnificent Seven stocks will likely go up as well, and vice versa. Just remember that the Mag 7 stocks account for about 28% of the S&P 500 weight. So it's pretty hard to push the S&P 500 up without first pushing the Mag 7 stocks. And in 2023, the S&P 500 increased by 26%, and the Magnificent Seven were responsible for 60% of the S&P 500's return. The year-to-date return for S&P 500 is 22%, and once again, Mag 7 accounts for about 46% of the total return. So now, let's talk about Mag 7 stocks. Basically, Wall Street expect the earnings of the Mag 7 stocks will come down in the third quarter and the fourth quarter this year. Okay. And this is mainly due to the high base effect, as earnings in the third and fourth quarter of last year had increased by a lot. So you won't see the same year-on-year growth as you did in the first and second quarter this year itself. For example, NVIDIA operating income year-on-year growth was 690% in first quarter and 174% in the second quarter. However, this growth is expected to slow down to 107% in the third quarter and 72% in the fourth quarter itself. Meta operating income year-on-year growth were 91% and 58% in the first and second quarter, but it will slow down to 18% in the third quarter and fourth quarter itself. But I am unsure how much of this slowdown has already been priced into the stocks itself. Just bear in mind that the earnings expectation are already quite low. So they might beat the expectation on the earnings announcement dates. However, last quarter, if you remember, when they released the earnings in August, even though most of the Mag 7 stocks beat expectations, the share prices still decline due to a worse than expected earnings guidance, earnings forecast for next quarter itself. So it's quite possible that this quarter will experience the same scenario. earnings might beat expectations, but the share price could still go down due to the disappointing earnings guidance itself. And most of the earnings will be released this month, but the immediate earnings will be released in the mid of next month itself. However, you should continue to favor Magnificent Seven stocks because their revenue and profit margins are still growing faster than the rest of the S&P 500 companies. For example, Mag 7 revenue is projected to grow at a CAGR of 12% for the next 2 years compared to the remaining 493 S&P 500 companies growing at a CAGR of just 3%. So basically, if you do not know what to trade or invest, maybe you should try to look at Magnificent Seven stock first. They are your flight to safety. They are your flight to quality and your flight to growth. Okay, the first stock I would like to talk about is Apple. So Apple will most likely release the latest earnings result on 31st October. It's my favorite company among the Mag 7 itself. If there is only one thing you need to know about Apple, it would be Apple Intelligence. Previously, only iPhone 15 Pro and iPhone 15 Pro Max user have access to the Apple Intelligence features, and all the iPhone 16 models launched last month can also access to the AI features itself. But before the iPhone 16 launch in mid-September, there is about 4% of the current iPhone user can have access to Apple Intelligence. So this suggests to you that there could be an upgrade cycle, especially considering about 43% of the iPhone user are still using iPhone 12 or older versions. And I believe that Apple has introduced just enough AI features to encourage all of us to upgrade our devices. If you agree with that, then Apple stock still has good upside potential. There is a lot of speculation about the iPhone 16 sales, but we will not know the actual sales figures until January next year, which is when Apple releases the earning result or when IDC releases the iPhone shipments itself. So many analysts have suggested to you that iPhone 16 sales are weaker than expected, are weaker than those of the iPhone 15, based on the shorter waiting time of the iPhone 16 itself. But I think investors cannot accurately gauge the demand issues solely based on the shorter shipping times without first knowing the Apple actual iPhone supply levels. So all in all, I just reckon that you should not be so worried about the iPhone 16 sales yet, because every analyst is still just guessing the number. We will not know the actual number yet. And when Apple Intelligence releases at the end of this month, it could also help boost the iPhone sales as well, because maybe they are not buying the iPhone yet, but to wait for the Apple Intelligence releases at the end of next month or at the end of this month, then they will start buying the iPhone 16. So the current analyst consensus 12-month target price for Apple is $244.93, representing an upside potential of 8.5% relative to yesterday's closing price of $225.77. Okay, let's talk about Tesla. So Tesla will report earnings on 23rd October after market close, and tomorrow is Thursday, so they will also talk about the robo-taxi as well. Here are some of the upside catalysts for Tesla. So Robotaxi will be unveiled on Thursday. Tesla will launch a supervised FSD by end of next year, and Tesla will start producing Optimus humanoid robots by next year. But I don't think you should care too much about this yet, because all these AI initiatives may take some years to materialize. Ultimately, Tesla is still a EV maker, is still a car maker. So the correct way to look at Tesla is that it is launching new models, including a low-cost model in the first half of 2025. If you believe that the low-cost model and other new models will be selling like hotcakes, then Tesla could be a good investment to you. So the current Bloomberg analyst consensus 12-month target price for Tesla is about 216.59, representing a downside potential of 11% relative to yesterday closing price of 244.5 itself. And now let's talk about NVIDIA. NVIDIA should be releasing earnings on 19 November. So it's always the last Mat 7 stocks to release earnings. I like NVIDIA because NVIDIA has more than 90% of the AI GPU market share. I reckon NVIDIA will still own about 90% AI GPU market share for the next 2 years. So this is the main investment thesis that you should like NVIDIA. Basically, I think NVIDIA AI bull run is similar to Cisco stock price movement during the dot-com bubble. So during the dot-com bubble, Cisco was the leader in providing the infrastructure equipment used to power the internet boom through the network routers. Similarly, NVIDIA is powering the AI development through the GPU. So during the dot-com bubble, Cisco revenue increased by 14 times, operating income increased by 8 times. For NVIDIA, revenue has increased by 5 times when comparing the latest quarter to the quarter when they first announced the when ChatGPT first announced the when OpenAI first announced the ChatGPT itself. So operating income, on the other hand, during the same period increased by 30 times on a trailing 12-month basis. So if you believe that AI bull run is similar to the dot-com bubble, there could be massive room for earnings improvement. So during the dot-com bubble, the maximum return for Cisco stock is over 4,000%. Since the launch of ChatGPT, NVIDIA stock's maximum return is 767%. So there is still room for NVIDIA stock price to grow if this bull run is as big as the dot-com bubble itself. But just remember that during the dot-com bubble, Cisco went down more than 36% twice between 1995 and year 2000. And if you believe that NVIDIA can generate the same return as Cisco, you should be getting yourself ready for some big sell-off similar to what Cisco went through as well. So probably you should not be surprised if NVIDIA dropped as much as 40% during this AI bull run. In other words, you need to withstand this kind of stock corrections. Otherwise, right, NVIDIA might not be suitable for you. Otherwise, you should always consider your position sizing. So the current Bloomberg consensus target price for NVIDIA is $147, representing an upside potential of 11% relative to yesterday's closing price of $132 itself. So as for Microsoft, it's widely expected that Microsoft Azure could overtake Amazon AWS by 2026 in the cloud computing market share itself. And I reckon the monetization roadmap for Microsoft is so far one of the best among all these Mat 7 stocks, or the best among Mat 7. So Microsoft is always, I mean, it's probably the only two companies among the Mat 7 that tells you how much AI improved the revenue growth other than Nvidia. So it mentioned that AI contributed 8 percentage points of the revenue growth of the Azure cloud business. And other than that, I believe that if you are looking for an AI software company to invest, maybe Microsoft is one of the best AI software company to gain exposure because it owns 49% stake in OpenAI and up to 75% of the OpenAI's profit sharing. So let's quickly talk about Amazon. So Amazon's story is all about margin expansions in the last few quarters. So last few quarters, Amazon share price has increased by a lot because of the margin expansions story. Meaning to say, Amazon has been improving the profitability, the operating profit margin by a lot in the last few quarters. But I think the narrative now is margin expansion will slow down in the next few quarters. This is why some analysts has been downgrading their Amazon target. Meta, on the other hand, is trading at all-time high at a PE ratio of 30 times. Google is still trading at cheaper valuations at a PE ratio of 23 times. Tonight, and you are concerned about a potential sell-off after the earnings release, you can enter a Nvidia short DLC position first. You can buy a Nvidia short DLC to hedge your Nvidia stock holdings for the next 1 or 2 days. You would then close your short DLC position when you believe the market has fully priced in the impact of the earnings release. But just remember that DLC are probably best suited for short-term trading, but not for long-term holding because they are quite costly to hold overnight. Okay, here I want to show you the one-day price movement after the Nvidia earnings release. So what I like to emphasize here is that sometimes it's beneficial to hedge your position due to the price volatility. You do not need to be a hero and try to participate in every earnings release. You don't have to be a hero every time and hold an open positions. So you can try to hedge your position using a DLC, for example. Nvidia fell 6% on the latest earnings announcement. So this probably could translate to about and 18% gain on a short DLC, short NVIDIA DLC position, given the leverage is 3 times. In contrast, if NVIDIA gain 24% on the earnings announcement, this would translate to a 72% gain on your NVIDIA long DLC position itself. To avoid this extreme price volatility on earnings dates, it may be wise to use DLC to hedge your positions. So other than hedging, you can always use Magnificent 7 stock DLC for short-term speculation. You can buy a daily long DLC if you think that the US stock DLC will go up, or you can buy a daily short DLC if you think that the US stock DLC will go down. For example, you can speculate based on earnings expectations. If you have a strong conviction that NVIDIA stock will go up 10% on the earning release, then the long NVIDIA DLC will go up as much as 30% itself, but you need to consider the traded currency. Other than that, sometimes the overnight trading for US stocks have some mispricing as well. Just remember that because US market opens at night, so during the Asian trading hours, there isn't much liquidity in the overnight market in the Asian trading hours for institutional investor to buy or sell the US stocks. So they have no choice but to wait for normal US trading hours to trade. So sometimes if you can see in the Asian trading hours, NVIDIA stock can go down by 4%, but when US opens at night, NVIDIA stock could extend the losses to 10%. Or sometimes in the Asian trading hours, NVIDIA stock can go down by 10%, but when US opens at night, the decline can be just 1%. So there could be some mispricing during the Asian trading hours that you can take advantage of. Other than that, I personally prioritize fundamental analysis over technical analysis nowadays. And since I like all the outlook of the Mag 7 stocks, I would mostly engage with long positions personally if I were to engage with the DLC trading. For example, if fundamental tells me to go long, I would try to find an opportunity to go long based on the technical analysis. Even if the technical analysis tells me that it may go down in short term, I may not want to partake in a short position if I really like the company fundamental. Because I do not want to get stuck in a short position itself. Okay, so I think that would be all for me. So thank you. Let me pass the mic now to Marcus. Yeah, Marcus, over to you. Thank you. Marcus, over to you. Sorry, Marcus, I think you are muted. Yeah.
Hi, hello.
Yes, can hear you now.
Hi.
Yeah.
Hi, sorry, a bit of technical difficulty there. All right, let me just share my slide first. Okay. Okay, hang on now. Okay, I hope that everyone can see my slides.
Yeah.
All right,
Okay.
so I shall start. All right, thank you, James, so much for your sharing on the Mag 7, as well as a preview of the strategies they can use when trading the US stock DLCs. So a very quick introduction. My name is Marcus. I'm from Société Générale. We are the issuer of the range of daily leverage certificates that we have listed on the Singapore Exchange, on the SGX securities market. All right, so you can buy and sell the DLCs on the SGX through your regular stock brokerage account, including Tiger Brokers. So it is available to you here on the Tiger Brokers platform. Okay, but before I continue into giving you guys an understanding of how the US stock DLCs that we've just launched, how it works, again, do check out the competition, do register for the competition that is coming up starting on 14th of October. The link is down there under this video, the banner. You can click on the banner as well to register for the paper trading competition that we'll have on the SocGen DLC starting on Monday, and with $10,000 worth of prizes up for grabs. All right, so do register for that. It's better to always try it using paper money first before you move on to using your actual money to trade the DLCs. All right, so today in the next 15 to 20 minutes, I want to share a very exciting launch that we have just recently rolled out into the market, the US stock daily leverage certificates. So currently, right now on our shelf of the DLCs, we do have Hong Kong indices, your Hang Seng Index, Hang Seng Tech, and Hang Seng China Enterprises Index, as well as the Hong Kong single stocks, Tencent, Alibaba, Meituan, quite a wide range of them. We also have Singapore indices, the MSCI Singapore Index, the Straits Times Index, as well as the main blue chip stocks in Singapore, your Singapore banks, Capital Venture, SIA, etc. All right, so we do have that Hong Kong and Singapore shelf established in Singapore on these DLCs over the past 7 years that we've been around. And we also ventured into the US indices range, NASDAQ 100, S&P 500, and Dow Jones Index over the back in 2022. All right. And now we are finally ready to roll out our single stock on the US stocks, Magnificent 7 stocks. All right. So we are rolling out our US stock shelf with the Magnificent 7 stocks, which includes your NVIDIA, Tesla, Apple, Microsoft, Google, Amazon, and Meta. All right. So the Mag 7 stocks will start off with that, with 3 times long and short daily leverage certificates, DLCs, on these Mag 7 stocks that investors can use to trade the underlying stocks for both long and short directions with that 3 times leverage exposure. All right. So this is currently our shelf, with the latest addition being the Magnificent 7 stocks. So the US indices DLCs is something that we've had for about 2 years right now. So that gives investors who have already traded our US index DLCs on the NASDAQ 100, S&P 500, and Dow Jones a flavor of what is it like to trade the DLCs where the underlying is only traded during where the underlying is traded during US market hours, but the DLCs itself are traded during Asian hours, during SGX market hours only. All right, so the concept will be very much similar. So those of you who already trade the US indices shelf should be quite familiar with the US stock DLCs that we have. All right, so this US stock DLCs, we've just listed it on the SGX on the 4th of October. Starting from the 4th of October, our first batch of US stock DLCs went live. So it's very, very recent that we have listed this, and we had a very good first day with quite a nice couple of trades on the US stock DLCs, the NVIDIA, Tesla, and Apple, which were launched on the 4th of October. And then the rest of them were listed on the 8th of October. So this is our little robot to signify our US stock DLC shelf, being that most of the Mag 7 stocks are all tech, the tech giants. So we do have this little robot to signify that. So if you do come across this little red robot here and there, I hope you think of the US stock DLCs that is issued by SocGen. All right, so this is the shelf of the Magnificent 7 stock DLCs that we have already listed on the SGX and tradable through Tiger Brokers platform. All right, so we have the Tesla, 3 times long and short, NVIDIA, Apple, Amazon, Meta, Microsoft, and Alphabet, which is the Google. All right, the rightmost column is the stock codes of this US stock DLCs that you can use to pull up, the ticker in your Tiger Broker platform. You look for the code TSXY, or you can look for MACW for the Apple one, PODW for the Apple short. You look up this stock code in your Tiger Broker platform, and you should be able to retrieve this US stock DLCs to buy and sell on the Tiger Broker platform. All right, so the main a lot of people do ask me, do you require, do they require ask them to open a sort of a SocGen account, an account with SocGen in order to be able to trade these US stock DLCs? No, that's not how it works. All right, so all the DLCs that we have listed on the SGX can be traded through any regular stock brokerage account, including Tiger Brokers platform. So you as long as you have an account with Tiger Brokers, you will be able to trade this US stock DLCs as long as you are qualified to transact in specified investment products, the SIP products. All right. So do look up these stock codes on your Tiger Broker platform, and then check it out. You can also use the paper trading competition to give it a try and test it out first before you actually use your own money to trade the US stock DLCs. All right. So before I go into how does the US stock DLCs work, let me just run through a few of the benefits of using the US stock DLCs. All right, so I mentioned that the US stock DLCs will start off with 3 times leverage exposure. All right, so giving you 3 times the performance of the underlying stock's daily percentage performance. You will get this 3 times leverage on a close-to-close basis every day, and also you can trade the underlying stock using the DLCs for both long and short directions. So there is a long DLC and there is a short DLC, as you can see from the previous slide. There is that list where every single underlying, there is a 3 times long DLC and there's a 3 times short DLC. All right. So in the name of the DLC, you can find the name is in the middle column of this table over here. In the name itself, you can see that the underlying of this DLC will always be at the start of the name, followed by the leverage factor 3 times. And then whether this is a long or short DLC, it will state there whether it's a long or a short, followed by SG, which is Société Générale, and followed by the expiry date in year, month, date format. All right, so you can find a lot of information from the name itself. And this long and short DLCs will give you the ability to trade both rising and falling markets, both bull and bear markets. So as what James mentioned just now as well, you can use the short DLCs for hedging purposes, right? So on the third benefit over here, these DLCs are all listed on the SGX securities market, and they are only tradable during SGX market hours, 9 a.m. to 5 p.m. All right. So you can only manage your positions during SGX market hours. You will not be able to manage your positions during US overnight market hours. All right. But this allows you to capture new opportunities during Asian hours and also get in early ahead of the US market opened in case of any earnings releases after the post-US market session, or also any high impact news during Asian hours. Recently, there was that Microsoft CrowdStrike issue. I mean, in the kind of events, where it could trigger a movement on Microsoft, for example, or on the US stocks, you might want to get in early ahead of the US market open. All right. And then the benefit over here as well is the fourth one is, I mentioned that it's listed on the SGX securities market, so you can trade it through any regular stock brokerage account, and you can trade it in Singapore dollar currency. All right, so you don't have to go through the hassle of changing your money into US dollars before you can buy the US stocks, etc., to gain exposure to the US stocks. For this DLCs, they're all traded in Singapore dollar terms for now. All right, we might issue US dollar terms DLCs in the future, but currently right now they are all denominated in Singapore dollars, so you don't have to go through the hassle of changing your money. You can gain exposure to the US stocks just by buying this SGD denominated US stock DLCs. All right, and I mentioned you can use the short DLCs to hedge your US stock portfolio. You can use it to hedge your US stocks against any price corrections in the short term. You can use that short DLCs, 3 times short DLCs, to hedge your exposure. And lastly, James also mentioned that these US stock DLCs are all 100 units minimum lot size, same as all the Singapore shares. And we issued it from January from $4 to 5 Singapore dollars. All right, so you can get exposure to the US stocks with as little as 400 to 500 Singapore dollars. You use less capital to gain exposure to the US stock as opposed to buying the actual stock itself. And with less capital, you are able to save on your transaction costs as well. All right, so this US stock DLCs, for those who are more active trader, you might be able to gain capital efficiency as well as cost efficiency. All right, so for those of you who are new to the DLCs, I just wanted to give a very quick basics of what the DLCs are. The daily leverage certificates are fixed daily leverage instruments. There is a long DLC and a short DLC, as I mentioned just now. So if you are bullish on the underlying stock, you will buy the long DLC. If you are bearish on the underlying stock, you will buy the short DLC. All right. So no matter what, you always initiate your position with a buy trade. You either buy the long DLC or you buy the short DLC, depending on your view of the market. All right. So the leverage, we have 2 times, 3 times, 5 times, or 7 times DLCs on our underlying assets. But for the US stock DLCs, will only be at 3 times long and short leverage. Okay, for now. Right, the DLCs are all linked to an underlying asset, underlying index or underlying single stock, and it will track that underlying index or single stock with that fixed leverage performance. Okay, so the DLCs are all traded on the SGX like a stock. You buy and sell them the same way that you buy your DBS shares or UOB shares through a regular stock brokerage account. And SocGen, we are there to provide liquidity throughout the trading day, SGX market hours 9 a.m. to 5 p.m., providing liquidity on the bid and ask prices and the bid ask volumes for you to buy and sell the DLCs with ease. All right. So we are there to provide that liquidity for you to buy and sell the DLCs. Basics of DLCs again. All right. How does the leverage performance work? The formula is quite simple in terms of the daily percentage performance of the underlying stock or index multiplied by the leverage factor will equals to the daily percentage performance of the DLC. All right. So in this example over here at the bottom, NVIDIA is up by 2% on day 2 versus day 1. So it rose from $100 to $102. So that's a gain of 2% on the US market close to close basis. So my 5 times long NVIDIA DLC, 3 times long NVIDIA DLC will be up by 6% on a US market close to close basis. While my 3 times short NVIDIA DLC will be down by 6%. All right. So conversely, if NVIDIA was instead down by 2% on day 2 versus day 1 on a US market close to close basis, then my 3 times long NVIDIA DLC will be down by 6%, and my 3 times short NVIDIA DLC will be up by 6%. All right, so this happens every day on a close to close basis. For those of you who trade the TQQQ or the SQQQ, the ProShares Ultra, Nasdaq, long and short ETFs in the US, well, these DLCs have exactly the same kind of payoff as those leverage and inverse ETFs in the US. Same performance, same leverage mechanism as the TQQQ or the SQQQ. All right. So this happens on a close to close basis where you'll get 3 times that of the performance of daily percentage performance of the underlying US stock. Okay. So I'm going deeper now into how does the US stock DLCs work. So as I mentioned, these US stock DLCs are only traded during SGX market hours 9 a.m. to 5 p.m. Singapore time. All right. So it's not traded during the US regular trading session that happens from 9:30 p.m. Singapore time to 4 a.m. Singapore time. The DLCs will not be tradable, but they'll continue to give you the exposure to the US stock overnight movement. All right. So it will not be able to trade it during the US post-market session as well, because US post-market will stop at 8 a.m. or 9 a.m. Singapore time, just before the Singapore market opens. But there is a bit of overlap in terms of the US stock pre-market session. So when the US pre-market opens at 4 p.m. during US daylight savings time, the SGX market is still open. So there is a bit of overlap between 4 p.m. to 5 p.m. where you see that the US stock DLCs will track the pre-market prices of the US stock market. Okay, so let's go into how does the performance of the US stock DLCs work, right? Given that it's only traded during SGX market hours, I think people want to know how does the performance of the US stock DLC work. All right, there's 2 principles for the US stock DLC. All right, let's go first at principle number 1, which is really the same principle that applies to all our DLCs, where the DLCs, US stock DLCs will track the underlying US stock daily percentage performance multiplied by the fixed leverage factor on the US market close to close basis. All right, so you can see in this diagram or this chart over here, you can see that the 2 boxes representing US market close T session and US market close T+1 session. So in this 1 trading day period on a US market close to close basis, you can see that the US stock rose from $100 to $115. All right, so that's plus 15% gain on the US stock on the US market close to close basis. My 3 times long DLC on this US stock will also give you that 3 times performance of this 15% gain. So if the 3 times long DLC closed at $1 on the US market close T session, if the close was $1, then on the US market close T+1 session, the next day, US close, my 3 times long DLC would close at $1.45. So that would be a plus 45% gain from its previous close. and 3 times that of the underlying stock's 15% move. All right. So this is before overnight cost and fees, this 45% gain. But this is where the 3 times performance is. And we will publish this intrinsic close of the 3 times long DLC every day on our website, dlc.socgen.com. We will publish this close price of the DLC every day after the US market closes at 4 a.m. All right. So this is principle number 1. Every day we'll give you that 3 times performance of the underlying US stock, daily percentage performance on the US market close to close basis. All right. But this happens, you see that the US market close T session, that's at 4 a.m. at Singapore time. All right. So you won't be able to trade the US stock DLC at the US market close T+1 at 4 a.m. in the morning. You will not be able to trade the US stock DLCs. You'll only be able to manage your position during SGX market opens when it opens later that morning. All right. So how does it work during the SGX market hours, which brings us to principle number 2. All right. So during SGX market hours, when the US market is closed, the market price of the US stock DLCs will be closely linked to the performance of the US stocks that are traded on alternative trading systems traded during Asian hours. All right. Over the past few years, we have seen the rise of Asian hour trading of US stocks, with brokers in Singapore, including Tiger Brokers, starting to offer US stock trading during Asian hours 24/5, where you can see the US stock prices traded during Asian hours. All right. So these DLCs will closely track that performance of these US stock prices that are traded on this alternative trading systems during Asian hours with that 3 times leverage performance. All right. So going back to the example again, on the chart on the bottom, you can see that the US stock closed at $100 and the DLC closed at $1 on the US market close T session on the far most left of the diagram. All right. So for example, let's see that that morning itself, US market close T session, after that US market close, the US stock reported better than expected earnings result. All right. So it reported better than expected earnings results, and thus its US stock share price on this alternative trading systems started to rally by 6%. Okay. So at 9 a.m. Singapore time, the US stock is trading at $106. That's up 6% from its previous close earlier that morning at $100. So it's up 6%. So my 3 times long DLC would track this gain with that 3 times performance. All right. So at the SGX market open at 9 a.m. Singapore time, my 3 times long DLC will be quoting around $1.18 to give you that 18% gain, 3 times that of the US stock's 6% gain. All right. So that's and at this point, if you're not already in the position, you can choose to enter your position now at $1.18. You can buy the 3 times long DLC at $1.18. If you expect that the US stock will continue to rise further and continue with its bullish momentum, so you can buy at $1.18. And if indeed during Asian hours, during SGX market hours, the US stock continued to rise further on this alternative trading systems during Asian hours, continued to rise further to $110. So that's a plus 10% gain from its previous close of $100. The 3 times long DLC would give you 3 times of that performance. 10% times 3 will be 30%. Right? So you'll rise to $1.30 to give you that 30% gain from its previous close of $1 earlier that morning. All right. So at this point, when the DLC is at $1.30, our quotes are around, our bid and offer quotes are around $1.30. You can choose to take profits. You can choose to sell back the DLC now to lock in the gain. So $1.30 divide by $1.18, that will be your profit. All right. So you can choose to sell back the DLC just before SGX market close, 5 p.m. You can, just before it closes, you can choose to sell back your DLC to lock in the gain, or you can choose to hold on to the DLC overnight. All right. So if you hold it overnight, it is important to understand or to know that this 3 times long DLC that you have bought, you will not be able to manage your position during the US market hours. All right. But the 3 times long DLC will continue to track the performance of the US stock overnight. So in the diagram, you can see that, okay, after the SGX market close, should the underlying stock continue to rise further all the way during the US overnight market hours, and the US stock closes at $115 as of the US market close T+1 at 4 a.m. it closes at $115 to give you that 15% gain. Then my 3 times long DLC will also close at $1.45 to give you that 3 times of 15%, 45% gain. But you cannot sell off your DLC at this point in time at US market close, T+1, 4 a.m. in the morning, Singapore time. You cannot sell back your DLC yet to lock in the profit. You can only wait until the SGX market open at 9 a.m. Singapore time that day to sell back when SGX market opens and we start to offer bid and offer quotes. You can, and if the underlying stock is still at $115 at that point, you will be quoting at $1.45 around there. And you can then sell back your DLC at $1.45 to lock in your gain of $1.45 minus $1.18, which is your entry price. All right. So this is how the US performance of the US stock DLC works. On a close-to-close basis, you'll give it that 3 times performance. During Asian hours, it will track the performance of the US stock that's traded on alternative trading systems during Asian hours with that 3 times leverage during the SGX market hours where you can buy and sell the DLCs. Okay, so that is how the US stock DLCs work. All right, so granted, sometimes I think more often than not, the US stock do not move that much during Asian hours. All right, so for an intraday trade on the US stock, DLC might not give you that much of a return. All right, so for those who are very active trader, you trade in the hourly time frame or like the minute time frame. Maybe this US stock DLCs might not be for you. But for those of you who are position traders or swing traders or are comfortable and you're comfortable with not being able to manage your position at night, you want to go in to bed early, and you're looking at a horizon of a few days or a few weeks, then these US stock DLCs could be something for you. All right, and also there is that 3 times leverage and that long short exposure. You can use the short exposure as well, which is not many instruments are out there that you can gain a 3 times short leverage on the US single stock. So I think that could be something that if you're looking for that, then this instrument could be for you. All right. So I mentioned that by James just now, you could also use it for earnings play. All right. So in the latest earnings period in 2024, the last one, James mentioned that they did have positive results, but the share prices dropped. Tesla dropped by minus 12% one day change after the earnings result. Amazon was down minus 8.8%. Nvidia was down by minus 6.4%. Well, so these are some big moves, that, after the earnings is released, after the US market close, that, at 9 a.m. Singapore time, you could capitalize on any opportunities that you see post the earnings to make a play on this earnings results and get in early ahead of the US market open. All right, so I think that this is going to be one very key value proposition of the US stock DLCs, where you can use the DLCs to capture opportunities after the US stocks release their earnings. All right, so before I conclude, I think a very important feature of the DLCs is the compounding effect. All right, so this is very, very important for any fixed leverage instruments out there. Your TQQQ or SQQQ will also have this compounding effect that everyone should be aware of before they trade the DLCs. All right, the compounding effect can work for you or against you. Okay, it can work for you in a nice trending market, but it can work against you in a volatile or sideways market. All right, the table on the left shows you a good example of how the compounding effect of the DLCs can work for you in a trending market. All right, on the table on the left, you can see that the underlying is up by 3% for 3 consecutive days, day 1, day 2, day 3. All right, and the DLC will give you that 3% times by 3, 9% gain as well every day on a close-to-close basis for that 3 consecutive days. But cumulatively, if you look at the underlying, it's up by 9.27% cumulatively over the 3 trading days. But my DLC, my 3 times long DLC, is up by 29.5%. So 9% times by 3 is 27%, but my 3 times long DLC is up by 29.5%. So that's extra 2% gain on top of the 3 times leverage. So you got more than that 3 times leverage due to the compounding effect, where every day your gains and losses are locked in. So your 9% gain on the second day is based off a higher base of $5.45 on day 1. Your 9% gain on day 3 is based off a higher base of $5.94 on day 2. So your gains are compounded in that sense when it comes to a nice trending market. All right, but where the compounding effect might not work so well for you is in a volatile or sideways market. You can see the table on the right over here, the underlying is up by 3% on day 1, down by 5% on day 2, and then rebounded by 11.67% on day 3. So every day, my DLC will still give you that 3 times performance, plus 3% times by 3, 9%, minus 5, minus 15%, plus 11%, plus 35%. So every day you get a 3 times performance, but cumulatively, the underlying is up by 9.27%, but my 3 times DLC is up by only plus 25%. So 9% times by 3, 27%, but my DLC is only up by 25%. Right, so this is less than the 3 times performance due to the compounding effect where your losses on day 2 is locked in, and then your gains on day 3 is based off a lower base on day 2. All right, so this compounding effect is a key feature of the DLCs and also one of the reasons why the DLCs are meant for short-term trading only and not for a long-term buy and hold, because in the long run, markets don't move in one direction only. There's also such thing as mean reversion, come back to the mean, etc. So these DLCs are really designed to be short-term trading only, intraday, overnight, a few days, or a few weeks, but please do not hold on to this DLC for months at end or even a year. All right. Okay, so these are some of the risks of the US stock DLCs. I will not go through too much in depth due to time constraints, but please do look it up on our website, dlc.socgen.com, where we have the full list of risks. But in a short, there is leverage risk because you are taking on 3 times leverage. There is the risk that the product performance may differ from the 3 times performance, as what I mentioned just now, the compounding effect. In a sideways or volatile market, you will not get that 3 times performance. It might in fact be even less than that due to the compounding effect. There is some airbag mechanism which I encourage everyone to read up on our US stock DLC website, where if there is a very adverse movement on the underlying US stock during US market hours, US regular trading hours, 9 p.m. to 9:30 p.m. to 4 a.m. Singapore time, if there is a very adverse movement on the underlying stock, plus minus 20%, then your 3 times DLC could have the airbag mechanism triggered during overnight US market hours, where the leverage is reset, so as to reduce the exposure of the leverage performance on the underlying stock performance. That can happen during US market, regular US hours. It will exclude the pre-market or the post-market session, but the airbag can only be triggered during the US regular trading hours, 9:30 p.m. to 4 a.m. And this is something that you should read up on as well. In the case of any extreme market moves, this airbag mechanism can be triggered on the US stock DLCs. Okay, and then last one, trading hours is different. We've emphasized it many times during the presentation that you can only manage your position during SGX market hours. You will not be able to trade the US stock DLCs during US overnight hours, so you have to be comfortable with that. All right, so please do read up on this on our website. You can find more information on our website over here, dlc.socgen.com. All right, there's a list of FAQs as well, which I do not have that much time to go through today, but it's found on this page under our website, dlc.socgen.com. Under the US markets page, you can find the FAQs, including where to find the underlying US stock prices during Asian hours, and give you a clue, it can be found on Tiger Brokers platform as well. All right, so you can find it on Tiger Brokers platform, which offers 24/5 trading of the US stocks. You can also find it on our website, dlc.socgen.com, of the US stock prices during Asian hours. All right, so visit our website to learn more. We also have an educational video in this page that you can have a refresh of what I've just went through on how the performance of the US stock DLCs work on this US markets page on our website, dlc.socgen.com. All right, so I think that comes to the end of my sharing. Please do join the paper trading competition in the link below or the banner below. Please join that link, join that competition. There are $10,000 worth of prizes up for grabs, and I think it's a very good way for people to learn more about the DLCs by just placing some of these simulated trades. You can track how the performance works, and that will equip you better in understanding the product before you engage in real life trading. All right, so to join the competition and hope that you can support our US stock DLCs. All right, James, back to you.
Okay, thank you, Marcus. Thank you, Marcus, for the presentation itself. And please join our trading competitions. Basically, you have 3 kind of ways to win the prizes. One is you become the most profitable traders during these 11 trading days. Otherwise, you can also participate in the lucky draw prizes itself, or you can try to be the first 60 trader to place a trade when the stock DLC competition first opened. Yeah, so it's quite easy to win the first 60 people who just place a trade. I think, yeah, you can try to win that prize. And probably let's move on to the Q&A sessions. I see some questions coming in. Okay, so probably the first questions. Sorry, I need to navigate to the page itself. Okay, so Marcus, probably the first question is how do this differ from the leverage instrument in the US market, such as leverage ETF itself?
Yes, I think those of you who are familiar with the TQQQ or the SQQQ in the US, the leverage and inverse ETFs, the ProShares Ultra one, which offers you 3 times leverage performance on the NASDAQ 100 index. Well, I think that our DLCs, daily leverage certificates, have exactly the same payoff as those leverage and inverse ETFs in the US, where you will provide that fixed leverage performance on a close-to-close basis every day to the underlying stock or underlying index performance. All right. So it's exactly the same, just that the DLCs are not an ETF. All right. We are not a fund structure, we are a certificate structure. That's also one of the reasons that our DLCs on our Hong Kong stocks or our Singapore stocks and Hong Kong indices can go up to 5 times or 7 times leverage. There's usually a cap on ETFs, but for certificate structure, we can go higher in terms of leverage. All right, and we're a different structure, but the payoff mechanism is exactly the same. All right, and also these DLCs are not option products. So in the US, I think there's US options that people use to gain leverage on the underlying stock or underlying index. Now, these DLCs are not options. All right, so please do not get confused with that. The DLCs are not option type products. There is no in the money, at the money, out the money kind of concept. There's no time decay. There is no implied volatility. All right, so it's not an option product. It does. I would say it's more similar to a leverage inverse ETF in terms of the payoff mechanism. All right, and it's not a margin product. So in a way, being not a margin product also gives you that added benefit of that, it won't have the risk of a margin call. All right, the maximum that you can lose on the DLC, yes, it's 100%, but as compared to other margin products out there where you could potentially lose more than your invested amount, these DLCs have a bit of that buffer where the maximum that you can lose is 100%, even if the underlying moves adversely against you. All right.
Yep. Thank you, Marcus. So we move on to the second questions. So the second question is, which Magnificent Seven stocks provide the highest volatility to trade? So probably I answered that first. To me, it's always either Tesla or Nvidia. I believe they are some of the highest. They have some of the highest volatility among all the Mag 7 stocks itself. The third one I would say is probably Amazon. Sometimes you will see Amazon go up or go down 10% during the earnings announcement itself. Yeah. So Marcus, for you, do you have anything to add on this?
Well, I wouldn't. I would say yes, on a day-to-day basis, Tesla and Nvidia could be more volatile. But when it comes to earnings results, I think it's basically all of them can be equally volatile. All right.
Yeah.
So I've seen like Google or Microsoft also drop, like in the high single digits before after earnings results. So when it comes to earnings results, I think everything is loose. It's basically you can't say which one is more volatile. They can all be very volatile. Yep.
Okay. Thank you. So the next question is what is the best or worst case scenario when trading this DLC? Marcus?
Okay. So I'll start with the worst case, okay, so that you can also have more recency effect on the best case later. But the worst case, yes, you could lose your entire investment sum on the DLCs if the underlying moves adversely against you. All right. With a 3 times or 5 times or 7 times leverage, okay, there is that possibility that you could lose your entire investment sum if the underlying moves adversely against your direction of DLCs within a very short span of time. All right. So for example, for a 5 times leverage DLC, all right, for our Hong Kong stock DLCs, for example, 5 times DLC, if the underlying stock moves more than 20% within a very short period of time, let's say 15 minutes, more than 20%, then yes, this DLC could lose its entire could become zero value due to this very big move on the underlying stock or underlying index. For a 3x US stock DLC, the underlying stock would have to move minus 33.3% within a very short span of time, 15 minutes, minus 33.3% in order for the DLC to lose its entire investment sum, or rather for the DLC to become zero value. So, but yes, there is still the possibility that the DLC could lose its entire value, and thus your entire investment could be lost if there's a very big move. All right. Then that's where I come to like the best case scenario. All right. So we've seen some of our DLCs really do meteoric rises because I think it's mainly because of the compounding effect. All right. So that's for me is the best case scenario of a DLC where you manage to enjoy the compounded gains in a nice trending market. All right. So from a 5x leverage product, if you get that compounded gains, in the end, you could even see that your performance is more than 10 times or more than 15 times leverage performance due to the compounding effect and the compounded gains in a nice trending market. So that's where the best case scenario for the DLCs, where you are able to enjoy that compounded gains over the few days or a few weeks. All right.
Yep, thank you, Marcus. That's very insightful. So the next question is that what would be some of the best timing, the best period to trade on this stock DLC other than the earnings announcement date itself? So probably I provide some answer to that one first. I think other than the earnings announcement date that you can see some volatility happening to the stock itself, you could probably look at some of the product announcement date or some event date of the particular company. Like Tesla always got some Robotaxi Day, Tesla AI Day, NVIDIA AI Day, or the Google product announcement day, or Apple iPhone release day itself. So I think that would be some of the better opportunity for you to trade if you like the volatility itself. Other than that, I think you should probably look at some of the macro events, like if you have a view on the non-farm payroll. So if the non-farm payroll is really bad, so probably you should also see some of the Magnificent Seven stocks to go down in prices as well. So I think other than the individual company's announcement date, you could also look at some of the impactful macro events that it would probably impact the stock DLC prices itself. Yeah. Marcus, you have anything to add on this?
Not much on that. Yeah.
Yep. Okay. So let's move on to the next questions. So Marcus, is probably for you again. What would be the recommended holding period for this DLC? I think you answered it a bit on.
This is a very common question. So I think just want to stress that this is a short-term trading instrument. So it's not a buy and hold instrument. So you have to be actively monitoring the market. And people, the usual people who trade the DLCs, people who trade on the DLCs usually hold it either on an intraday basis, overnight, a few days, or a few weeks. All right, but generally we do not recommend that investors hold these DLCs for months at end. All right, and definitely not a year.
Okay. So probably last question here is that again, Marcus, is for you. Any plan to launch other US stock DLC other than the Magnificent Seven, like Palantir?
Palantir is a bit more volatile than we like. But definitely there are plans to expand this range. This is just the start of the US stock DLC range. Definitely we'll be looking to see whether we can include more US stocks within the range, so that investors can have a wide variety of choice. Yep.
Okay, that will be all the questions